The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 17th day of January. My pleasure to be here, Monday through Friday, noon till 1 p.m. The E-mini, look, it's up 11 at 27.93. Look at that candle right there from yesterday. I have 2808.50, a low of 2769.25. What I like to do, just haven't had a chance, is to draw a rectangle immediately. When you've got a long-legged doji type candle, that just makes it real easy to identify the parameters to monitor. And within the 120-minute chart, you've got a leg B. We've just made a peak B, and we're watching this because on the downside, you could actually put in another rectangle at the low end right there and say, okay, there should be 120-minute chart that goes to possible D below 2808.50. However, this morning, the Chapman Wave trend gauge flashed to say that within 2 sessions, you should get a 9 to 11 point E-mini rally that could affect positively the cash S&P and Dow indices. Isn't that interesting? Because it just suddenly flashed. Now, one of the things that it says to me is sometimes you could include it as starting that very day. What I have found is that when it starts that very day, regardless, you still get quite a nice pop to the upside. Now, one of the things that we spoke about yesterday is the high volatility index. So let me run the numbers now. Here we go, INDU, and then we can talk about some of the nitty-gritties. The Dow up 190 at 25,982. Yesterday, it gaps up and runs all the way right through 26,000, goes to 26,086. Next thing you know, it plunges nearly 400 points, and the intraday action has it suddenly testing the 25,700 level. But before you know it, it comes back and it closes. I say to subscribers to my opening call, after all that, you still got just barely and almost an apology for a down close, minus 10. The S&P was down much more, minus 10 itself. Minus 10 in the S&P is different to just minus 10 points in the Dow. However, this is going to be very interesting because the volatility index spiked to 21 yesterday? 12.41 yesterday. And today it spiked to 12.81. Trading right now at 11.48. So 12.81. And that says to me, we've seen it so many times before. Let me just open this out, and you'll see how many times you've had a huge spike to the upside in the volatility index, and within a couple of days, the Dow was pushing to highs. And that's what I said. So we didn't want to get too carried away. We've got quite a lot. We've got, I think, 6 long positions, 1 short position. And I see that it's kind of an insurance position in a sense. It isn't. I didn't treat it really as a trend because, as I said to subscribers, that very high VIX reading should, in fact, give a bounce at some point today. Well, bounce. Look at this. The Dow's up 197. There's 0.70. The S&P is only up 15 at 0.55. This is going to be really interesting. The Dow, as I had mentioned, now it's perhaps almost a year ago, that the Dow was in its most perfect mode because it had, although it had 5 financials, which is rare, that in essence has been hurting and helping, but mostly helping the Dow stabilize when other areas got weak. But the overall mix in the Dow is really quite perfect. It's got high tech, it's got financials, it's got Home Depot. It's just all over the show. And that really is a very balanced portfolio. It's the first time I've seen the components in decades as satisfactory as I see it now. Okay, let's go on now. So the volatility index, as I mentioned when I did Tom's show yesterday, suggests that if the VIX starts to go down to the low 11s, especially if it hits the 200-period moving average of 10.94, that's going to really give a boost to the Dow. Now, I also have an indicator that says in the Chapman Wave trend gauge flashed this morning and is suggesting that within 2 days you should get a 9 to 11 point gain. That suggests that we might be testing the all-time high in the Dow unless there's some really bad news. Now, we'll talk about that in a moment. Let's go one step at a time. So we've got the VIX index 11.47. If by the end of the day there's a sudden turn down in the Dow's now 119 and 1 up. If it's only 120 to 90 points up at 3 o'clock, you'll see that VIX start to rally again. That's the sort of thing you want to watch if you are bearish. Now, what I wanted to do is to say, within the S&P context of the 500 stocks, it's holding really well. It's an inside bar, lower high so far and a higher low from yesterday's 20. Did I write that again incorrectly? That should be a 0. 2807. I keep trying to change that, and I keep forgetting that it didn't. There you are. 2807.54 was the high yesterday. We were up 14. Pretty good, actually. At 2790.63, really good rebound. MACD is strong. Stochastics at 91%. That's strong. On-balance volume has turned down at a peak D. We'll see how that holds up. Weekly strong, monthly strong. 120-minute chart made a peak D and is pulling back, holding the 9-period moving average. So far, pretty darn good action. Let's go to the QQQ, which is the NDX 100. Power shares trading at 164.78, up 76 cents. Inside bar, there's that repellent zone that I drew and I showed yesterday, and certainly for subscribers over the weekend, I talked about it. We went into that zone and pulled back. Now we might try again. 166 is really the issue. If we can get to the 166s, that's going to be really good action. Weekly chart is very good. I've only got a B in the yeah, there it is. A B could be an alternate count. I don't think so. I think it's a B in the 120-minute chart, and that does suggest that there should be higher prices to come. It's up 0.75. It's actually only up 0.46. This is going to be interesting because the SMHs made that missing leg D that I've been talking about yesterday, and today it followed it up. It's even higher, and this is really good action. Look at this. The SMHs, the semiconductor market vector semiconductor ETF, 105.03, up 2.21. It's a day late going for the left side high of 105.83 that was hit twice back on the 22nd and 24th of November with the Chapman Wave 2-bar reversal, but it seems to be headed there. That'll make the U-shaped pattern in the weekly chart, and that is good action so far. So here you are, semiconductors. I can see this going further, going higher altogether. I want you to look at the IWM. Why? Because the IWM, the Russell 2000, had a pretty big percentage move down yesterday from its leg E high, and I see to subscribers probably a peak E this morning. It's at 157.08, up 95. It's up 0.61%. That is not bad action. I need to talk a little bit more about this. I'll be right back. Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Just wanted to show these 10-minute charts quickly. The 2-minute chart just went to peak E in the E-mini. You got a leg D in the 5-minute chart and only a leg C in the 10-minute chart. So parameters to watch. Support, it's at 27.93.25 right now. Under 27.91, I'd actually say under 27.90 suggests that there's a little bit more of a lunch hour timeout. And if, in fact, it breaks above, I think it's still going to go higher because it's in leg C. But I really need to see it above the high that was made of 27.94 to 25. Yeah, above 20, it's at 27.93.50. If it can get to 27.95.25, I think that we will still go higher for quite a bit this afternoon. All right, let's get out of that. We'll go right back to our work here. The IWM has supported 155.99, the 9-period exponential moving average. The severity of the pullback yesterday is suggesting that something really big has to happen for the Russell 2000 ETF to break above 159.41. It can happen, but it's going to take a lot, and it might take a couple of days to try to get to the 158.05 area, which is really, at that point, you're going to say, oh, okay, now I could touch the previous high, make an all-time high. But I'm watching this closely because it's been one of the weaker indices from yesterday, from 10 o'clock until today, 20 past 12 as we are right now Eastern time. So let's watch this one closely. If you go to the gold contract, now it's going to be very interesting because gold is so reluctant to have a rest. It's in leg C in the daily chart. It's down 2.8 at 1334.3. The weekly chart is still pretty strong. Stochastic funding went to 86%. That's good. But the 120-minute chart is suggesting that there's just a little timeout, a little breather after such a spectacular move. And so we're going to be watching 1324 is the 9-period exponential moving average support. And doesn't matter what the reason is. Could be the dollar, could be the euro. If there's a push above 1340, I'll say 1348.50. So it's about 4 points higher from here. That'll be really outstanding action. I think it's just having a bit of a breather right now. If you look at silver, kind of the same thing. Silver, in fact, maybe a little deeper. It's gone to a peak D. And this particular candle is like what I call a Chapman Wave Roman candle. It's suggesting that if silver trading at 1710 actually starts to trade for about an hour and a half on any day below $17, there's a real good chance it's going to test the low of yesterday, which is at 16.80. So far, all it's doing looks like a consolidation after some pretty big gains. Now, if you go to copper, copper was failing earlier. What's it doing right now? Yep, it's even lower. It's at 3.18. And what I was suggesting is the rectangle formation that was seen on the, to tell you the truth, everything about this peak C right here, the high that was made on the 28th of December in the continuous contract of high-grade copper at 3.3145, everything about that looked like it should have been a D. Instead of a C, that looked like it should be a D. Couple of things. In the Chapman Wave methodology that I call the squash pattern, where the stochastic and the MACD get really close to one another, immediately offer a low and a really sharp move up. Characteristic is that the MACD usually holds very strong, the fast-moving average, the green line, while the stochastic, which is the torque, which is the one that really sets the pace by screaming through the first and second and then third gears, takes a breather until it gets to the fourth gear, that's peak D, or leg D, and the MACD takes over from C. Well, at this point, it didn't, because the stochastic pullback way under 80% is down 27%, and the MACD's fast-moving average, the green 9-period differential, is plunging. In fact, it's expanding. The differential and the difference, in fact, between the slow-moving average and the faster-moving average, the green and the red lines, that's expanding. So that doesn't say much for copper at this point, but it's still a high-level consolidation until it breaks 3.15. And then it says, uh-oh, it was a little bit more serious. Okay, so that's high-grade copper. Let's go to bonds. And bonds, this is going to be so interesting. Look. Rallying a little bit again today, up 22 cents at 125.26. On a visual basis, the patterns that we're looking at in the weekly, there's arch, and then the cup, and then another arch, actually inverted V shape, down, up, says that this sine wave type action needs to get to 126.50 to continue that ziggy-zaggy. Otherwise, it's going to come back down and retest again the 123.07 200-period moving average in the weekly chart. At this point, it's just trading in a range, and that's all I can say. If you look at the FVX, this is the 5-year, really the leader of the pack. It's gone even higher. Is this an instant restart? I'm calling it E, and now it's in leg F. Woohoo, this is going to be so interesting. Leg F / B, I should probably put, but after so many Ds, look at this. You've come from right here. Look at this. From the low that was made back in, was that September the 3rd or something? September the 8th. Oh, that was the day that the dollar gave that turnaround signal, and the euro as well. So on the 8th, at 16.18, the 5-year T-note yield starts a rally, and it goes to A, B, C, D, and then it squeaks to an E. Pulls back, that was the E that was on the 25th of October, pulls back, uses time rather than price, gets back over the 9-period moving average and goes to A, B, C, D, peak D. Pulls back one day, starts a move to the upside, goes to a D, E, and now it's in a leg F. So E and D's have been the most important notations. Finally, it's going to an F, unless this is a recycle. And all I'm saying is that I'm watching this really closely because the weekly chart is still only in a leg C. Look at this. A leg C, and the MACD is very strong, and the stochastic is very strong at 94.59%. Relative strength, see the little red line, red because it's over 80%, acting extremely well. All I can say is that yields probably going to tell the story for the big pullback that should be coming at some point this year. So 5-year, very strong. So now let's go on and say, within the context of all of these, we want to look at crude oil. What's crude oil doing? It was down yesterday a little bit. Today it's making a peak E, with the MACD still strong, stochastic at 88%. This is all good. And the weekly chart squeaked to a leg F, with that high yesterday. So what we're looking at this particular point is that crude oil is holding very well. 63 to 62 will be key support. Closes under 62 at any point, and you can say, oh, okay, now we're going to have a bit of a timeout after a spectacular move in crude. Now, I had a question, would you be shorting crude? This is the first time I can say on a trading basis, there might be 2 points. I'm not sure there'd be 3 points, but maybe 2 points, but I wouldn't be doing anything. I'd rather be saying, I think I want to be buying it if certain conditions are met on the downside. So I wouldn't actually be shorting. Question about Goldman Sachs. Goldman Sachs is down sharply today. It's down 5.66 at 252.80. Made a 262 round number high this morning, pulls back. 262.14 is the all-time high from about 4 weeks ago. I'll talk about that when we get back with the XLF questions I've got about it, plus Boeing and some others. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. I'll go through the list, but I did have a question at the end. It's a good question about CF Industries trading at $39.78, down 93 cents. Buy or hold, buy, sell or hold. What I said was, if you're holding it long and you still got the position, it had hit the 44, I think it hit 44, just missed it, 43.98 2 weeks ago. Now it's trading at 39.77, 5 points lower, or just on 5 points lower. So my answer was, let me read it. I said, longer term, I would add to CF if 37.36 holds. for 1 to 2 weeks. In other words, if it comes back down there, that's a 200-period moving average. That's been a base before. If it once again becomes a base, I would consider that really important, and I would consider adding to it. Near term, I see it going lower. And yes, the monthly is following the weekly with higher highs and higher lows. But near term, you can take a little off so that you have it ready to add back at some point. So the question is, especially since the question came up, if you're worried, then I always think, if you're worried about something, you want to sleep easy. You don't want to, market shouldn't be a place to be panicking about. You should always have some kind of a plan. Things happen and you should be ready for the worst. So I'm looking at this and I'm saying, the monthly chart's really improved a lot, higher highs and higher lows. Weekly chart's gone. Possibly, I'm calling it an F. I don't see any other reason why I shouldn't call it an F. So I think it will be pulling back, but the monthly chart is suggesting, technically, it's still in an upward trajectory. It might be bumpy, but it's upward. So I would say just, feel comfortable, take something off, and you dedicate that to, if it goes to the 37, 36 area, that's where you put that back. That's really the way I would look at it. Would I short it? Wow. If you asked me that yesterday, I would have said your risk was 41.99, the 9-period moving average. Now I'd say yes, but I don't think, for 2 points, you're going to mess your thinking up. You are long. You want to try to stay long. I wouldn't, in your case, be shorting. If you're a really short-term trader, I'd say, hey, go short and just use a trading stop. And I wouldn't let it ride too long. I'd just say there's X amount I want, and I'm getting it out. As soon as I get it out, I'm done. So, yes, it's correcting in an ongoing bull phase. That's the way it looks right now, CF Industries. Of course, I can't remember. I've done this many times before. CF Industries Holdings, can't remember what they are. I think some kind of agriculture. I'm not sure. All right. So next question I had was, let's go through this. So, Basil, is the dropping U.S. dollar not an inflation sign? Will this not make interest rates rise? Could you please address this on your show today? Many thanks. I'm not, that's kind of like a fundamental question. All I can say is, if I'm looking at the dollar hasn't been able to use the last 2 days as a real grip and traction to push from the 90 level to the 91.63, right above the 9-period moving average of 91.27. It just hasn't. It should have done that. It hasn't. I've got the rule of thumb that says the arch formation has 2, sometimes I'll say 3, but I'm going to make it just one more week below the 91.01 low of the week of the 8th of September to repair and get back above it. If I can't do that, I think I have a tough time. That's going to suggest that the 89.65 200-period moving average in the monthly chart, you can see the orange line right there, is going to be tested. So the dollar is really at a very critical time and price level right now. If you look at the EUR-USD, euro-dollar currency pair, had a really nice move. I believe I don't think this looks like a G right now. It looks more like a B, and it's a B in the weekly chart. I think the euro is going to go higher, and I think the dollar's had a problem. It was too short a period for the balance. It really wasn't from September the 8th till a few days ago and breaks down. That's not very good. It should have gone right up into February with higher highs and higher lows, and then started to move to the downside. This is not good action, so I'm not happy about that. Next question is, so shorting the ESH 17, I'd stay long right now. I do believe there's going to be a great shorting opportunity. I would just give it a little more time. Maybe today's Wednesday, maybe Friday or Monday. I just don't see it right now. I do see a pullback coming, and it might be the double top. But if you ask me right at this moment, I see a little bit higher prices to come, especially with the trend gauge flashing. We'll see if that works out. Next question is Goldman Sachs. So Goldman is down 6 points, down 2.44%. I'm still going to consider this more a high-level consolidation. The fact that it's down 6 and it's not down 10 or whatever the news was, it wasn't good. It made a lower low, but it also almost made a new high. So it says to me it's in a rectangle formation. Wouldn't be surprised if it slips. My target for quite a while now, people have asked me, where would you go long Goldman? In your newsletter, and I said, I'm just waiting. My eye says between 252 and 248. Well, we almost did that today. The low is 248.84. I'm still going to give it a little bit more time. I still think it's going to give a nice buy signal at some point. It just hasn't been behaving as well as it should. Some of the other financials have done very well. If you look at the XLF, which is obviously being impacted by Goldman, this is a leg D, but look at that high-level consolidation. MACD is good, Stochastic's good, the S&P Select Financial Spider Fund, it's made the propeller shaft circle right there, which has a 1-to-1 upside projection. It's leg D in the weekly, leg E in the monthly. I like it. I do think the XLF will consolidate at some point fairly soon, but having pushed above this Chapman wave stalk leg formation so strongly, it's saying at 29.25, somewhere between 28.50 and 27.80. That's going to be tested, but that's really the issue. How does it get tested and how does it hold? Question of BAC, Bank of America, which we are long. Trading at 31. Had a high yesterday. What earnings for today? Well, I think earnings might have been today. 31.79 was the high yesterday. Let me just double check. News. Oh, there we go. News. Okay. Waiting for headlines. BOFA reports Q4 sales 20.4 billion versus 21.5 billion estimate. Didn't quite hit that, huh? GOP EPS 0.20. Yeah, I don't think it's. I don't see anything there. Goldman earnings came in earlier above Wall Street expectations, both revenues and adjusted profit per share. But like other major financials, Goldman Sachs said it took a 4.4 billion hit tied to the tax reform law. All right, so these things will sort themselves out. All I can say is that I'm looking at it right now, and Bank of America is holding pretty darn well. I do think it's going to consolidate and test the 29.58 level of the 9-period weekly moving average. We'll be right back. More questions are going to be coming. Yep, I'll be right back. We'll look at Boeing and GE after these messages.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I just realized I didn't answer Paul's question about inflation. I think inflation is going to come about through other things. I spoke about it yesterday with Andy Hecht when I interviewed him when I was doing Tom's show. My thinking here is that the Fed wants inflation. We're going to get it through yields. We're going to get it through the hard, some of the hard and some of the soft commodities. But we haven't really got it in as some of the softer commodities that are really going to, the grains, etc., that I can see would really impact the commodity index. It hasn't done that yet. So I do see inflation coming along. I'm not sure if it's dollar related. You know, I look at that and then suddenly there's other things happen. And then all of a sudden that relationship just doesn't quite work out. I would rather look at inflation as inflation, and it's coming from other sources. There is inflation by choice. That's when you choose to buy a more expensive car when a cheaper car or a less expensive car could give you exactly the same thing, but maybe not quite the sexiness. So that's choice. There's the commoditization of, say, chips, not potato chips, but maybe that as well, but certainly the way we look at the commoditization over the years with the fabs coming up and the different semiconductor index, semiconductor companies vying, competing, until they come out with something really different. Then they have the edge for a little while until somebody plays catch up. So that's different. But I do see that there is inflation out there. It isn't always being priced in. And at some point, I would say within a year, as we're sitting right now, January of next year, I wouldn't be surprised if we're actually seeing inflation not just rear its ugly head, but start to worry the Fed a little bit. That's the way I'm kind of looking at it. Because once you let inflation out of its box, sometimes it can be really quick before and it shows up quite viciously. Hope that doesn't happen. Just steady upstream is fine, but big moves in inflation, not a good sign. Question about Boeing. So what I said to subscribers yesterday morning, I had a special line and I said, we've got to look at these stocks, we've got to monitor them closely, and that was Alcoa, Caterpillar, Deere, and Boeing. Of course, the others, but these just seem to fit exactly what I like to look at. So Boeing makes a leg D, pulls back intraday. MACD strong. Stochastic is pulling back, but still way up at 92%. On balance was spectacular till it pulled back yesterday. Look at this move in the monthly chart. It goes from the 100 and let's call it the 140s, 130s, sometime back in middle of 2016. And now it's more than double. For Boeing, I mean, Boeing. I've never been in a Boeing hangar out there where they are, where is it, Seattle, I believe. I could just imagine the size. And I always chuckle because years ago, when you went to London, you went to the train station, it was like you were outside, even though you were inside. They never heated anything. Now I think it's changed. The last time I went, there was quite a bit of a change. But Boeing, it doesn't matter how big the hangar is, they're still going to heat it. At least that's the way I think it is. A different philosophy. But can you imagine the size? Can you imagine their expenses, just the heating bill alone or air conditioning? Well, look at that move. This is just 1 month. This is the month of, look, this is the month of January. Starts off at 295, trading right now at 345. Had a high yesterday of 347.73. I think Boeing is going to tell us that these huge cyclicals, that these huge industrials are going to take a bit of a timeout, and I think that's coming fairly sooner rather than later. That's my thinking based on just the verticality of the moves that we've had lately. But that doesn't mean to say it has to crash. It just says, hey, it's time for a consolidation. Big deal. If it gives back a week and a half's worth of 2 weeks, let's say, it goes back to 300, down 45 points, 12, 13% after such a spectacular move. Nothing wrong with that. That's kind of what I'm thinking. So so that was the question. I don't know if that was the question, but that was what we were looking at. So UTX also had a spectacular move, made all-time highs. Yesterday was an all-time high, 137.73. Leg D, probably a peak D. Only a leg B. I have to call this a B in the weekly chart. Leg D in the monthly. There are some spectacular stocks for 2018. I think they're overbought. A lot of them are overbought. Next question was bots. Bots is the robotics ETF in a whopping leg C. I can't believe, I just keep shaking my, sometimes there's stocks or indexes and you just say, I wanted it here and I was a little afraid. By the time I turned around and said, I really am going to get into it. Look at this. Over here, I'm thinking, okay, if it can just come down, it's at 23, it's 24.85 off the most spectacular. One of my tennis playing friends mentioned to me in the summer, I said to subscribers, let's wait for a pullback. So that's his summertime. I think it was maybe in June. It was roundabout, it made a peak D. It was at 18.56. Globix Robotics and AI, Artificial Intelligence ETF. So I didn't get in. The MACD, everything it just never gave a chance. Once I decided I really want in, especially if it broke 24.85, the high that was made at peak E at 11.20 on the 24th of November. Look at this. It's still climbing. It's outstanding. I only wish it does have another big pullback. This is should be on your buy list for 2018. It's only in a leg B. So yes. So Greg, I can't see anything right now. It's only in leg C. It should make a D by tomorrow, maybe. Morning. Could you look at bots? I have a daily wave count of G/C. Yep. Yeah, you could make it F/C. I've got. But I'm not very confident in my count. I have a starter position. Oh, I have a starter position at 20.22 from 8.24, but have been waiting for a pullback to do a full position. What do you think? Thanks, Greg. Greg, congratulations. All I can say, it's at 26.90 right now. I'm not sure about that second position right now. If you didn't get in before, I'm not going to tell you to get in at all-time highs when it's really, the MACD and stochastic are outstanding. It looks to me like it could actually hold. 25.81 is the 9-period moving average. Do you want to just play the chance that it can go higher? That you could do that. You've got a good position, but I would wait. Let it pull back to 25.81 to 25.38, somewhere around there. Email me again. We'll look at it together. You're in a fabulous position. You haven't got your full position. Sometimes that happens. SLB, the next question. Schlumberger. Schlumberger's had a spectacular weekly move. It's in a leg B over the 200-period moving average. Monthly chart in a leg, brand new gray leg A because it pulled back so sharply. It's in a leg E for the weekly, but it's holding beautifully. I think it's going to go a little higher, and then I think it's going to consolidate. So what's the question? Just the wave count, yeah. It looks spectacular. If you're long, I think you are long, Sarah, because Julie, is that Julie? Yeah, Julie. Because you've mentioned many times. Great move, spectacular move. Getting a little bit toppy, but all I can say is at 77.61, I can see it going a little higher. Oh, the question in the den was COP. Dana, I'll do that as soon as we get back. I'll do it live. I can see it going to 79.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, you've got Steve Rhodes coming up and Dave White. Dave is doing a webinar tonight at 5 o'clock. Should be fabulous. I've been going through with him some of the a new technique that he's been developing. It looks really interesting. It's got the chance of some really good results over a year's period. This should be a great webinar. So I advise, if you have a chance, please sign up, check it out. So let me just see. So Tim wants to know about Ford. Ford, where did I put the notation? Right. Ford right now got hit yesterday. This morning, was it? With an earnings report, or late yesterday. Makes a peak D right at 13.48 on the 16th. That's yesterday. Closes at the low of the day. Plunges today. It's down 88 cents at 12.22. Question I had was two questions. One was from Tim, and then someone in the den wanted to know, what do I do with Ford? Should I get out? I said I would take off as much as I can on Ford, but I would definitely keep a little bit because it's going to tell you when to get back in. Now, will it go much further to the downside? At the auto show, there's a Detroit show is going on. I think the Detroit show is way more innovative than the one here in Boston. I always get the feeling Boston's kind of the end of the run, and then the Detroit starts something fresh. So when I looked at Ford, yep, they got those trucks, but I must tell you, the lineup looked a little old. The Lincoln looks really good. It's just one of the best at show. The Lincoln, all the Lincoln products. So, yep, there's something there, but this is finance. And when you get to finance, it's a different department altogether. Leg D in the weekly, just go slowly. I think General Motors is probably a better one out of the two. And FCAU, I keep going past this Jeep dealer down the road, and he's just, there's always something new on the lot. This guy's really selling stuff. So, yeah, it's just pulling back a little bit. There's a Fiat Chrysler group. I must say the Jeeps have changed a lot, and the whole Chrysler Fiat area, yeah, they have niches, and certain people love Jeeps. So I'm looking at this leg D in the weekly, monthly, finally. Yeah, it's holding very well. So I think we covered, I think there were 8 or 9 questions I had. Yeah, we've covered most of it. So what I'm looking at here is, just watch this closely. I've got the reading Chapman wave trend gauge, which says we should have another 9 to 11 points upside in the futures, maybe by tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.